Hi guys, welcome back to the channel TTL Forex. So we're back on another episode on how to trade Boom 500 index successfully, the episode 4. All right, so this is Boom and Crash series on episodes, so you're going to see them on the playlist. I'm going to list them out for you guys on the playlist so that you can be able to see them and learn on how to trade this indices successfully with this episode series. All right, so now that we're on the episode 4 on how to trade Boom and Crash, on how to trade Boom 500 index successfully, I want you guys to pay attention on the market condition right now. Okay, we're gonna pay very close attention on this market condition right here. Now take a look at this point in time. All right, the Boom 500 index market right here, we can clearly see that the market have been selling and it has been buying, right? But this is the last zoom level. I zoomed out of the chart so that I will be able to see the market movement clearly. Okay, all right, so I've just zoomed out of this market right now. What do I see here? I saw that this market bought. Remember that this is the 1 minute time frame. This market bought up to the overbought level and it sold towards this point right here. Okay, and now it has gotten to the overbought and is going towards the downward trend again. So I'm saying that this market would buy in price movement. Okay, this market would buy. It should buy because the market have sold. All right, it have sold, then it will buy. If you take a look at this point right here, it sold a little bit, then it bought. The spike came in, it sold again, then it bought. Just as you can see, now it have sold, now it will buy because this is the 1 minute time frame. So the market moves quickly on the 1 minute time frame. So we'll go to the 1 hour time frame right here. The 1 hour time frame, let's take a look at this point in time. So this is a good position for us to see a good buy entry. The reason is because if you take a look at the 1 hour time frame right now, the market sold, it bought, it sold, it bought, it sold, it bought a little bit, just as you can see. So the market have bought right now, then it sold. As you can see, it's selling, then the market will buy again. Now this market would buy, but it will retest upwards. As you can see, if I zoom in clearly right here, take a look, this candle tick right here is supposed to sell, right? If we go to the 1 minute time frame, you can see that the market already had overbought and is selling towards the downward trend. Okay, but if you observe on the 1 minute time frame right here, let's zoom out. On the 1 minute time frame, you can see that this market is supposed to go downwards, right? But the market have sold for over 10 candle ticks, and when the market have sold for some certain amount of time, the market, there's a chance that it would buy. All right, there's a chance that it will buy on the boom market. So that's what we're seeing here. That means on the 1 hour time frame right here, on the 1 hour time frame, the market will retest upwards again. Okay, it will retest, but it won't break out because the market has already broken out. At this point, you can see it have sold, then it broke out and it's now selling again, which is following the correct pattern. Okay, it's supposed to sell, but it has broken out. Just as you saw here, it sold, then it broke out, it sold, then it broke out. Okay, so now the market broke out, it will sell for a certain amount of time, but it doesn't mean that the market won't retest upwards. What I mean by going back upwards, it will buy a little bit. So at this point in time, it's not a good entry point for you to place your your sell entry, because if you place a sell, there's a higher chance that the market could buy, and you should not place a buy right now. To place a buy, you need to confirm. All right, to confirm the entries. So this is where we'll put on the relative strength index indicator, the RSI period 14, levels 19 at level of 10. You put that right here. Ignore this description. Do not add sell right here. Do not add buy. Okay, just put 90 and 10 for the description. For the style, 4 pixels color black, then for the style on 1 pixels color white, the color of your screen. Okay, then what you do right here is to put on another indicator, which is you put on the MACD, okay, so that we can get a clear entry point. You use the fast EMA on 14, slow EMA 24, MACD SMA on level of 10. You apply to close on all time frames. Main color black or the 4 pixels, red the signal red color with 4 pixels, just like this. You can see the parameters, then you click on done. Now we're going to look for a possible buy entry so that we'll be able to catch the spike that's coming on into the market. You can see at this point right here there was a spike, right? So this is certain that the spike would soon come into the market, because if we take a look right here, the same thing that happened here happened here, level of 10. So there's a spike coming into the market. So what you do is to place a buy, okay? Place a buy right here so that you'll be able to cash the spike, okay? Remember that this is an illustration, okay? I'm using this as an example to you guys, to teach you guys so that you'll be able to understand, all right, so that you'll be able to understand what I'm talking about. So we're expecting the spike to come in into this market. Maybe the spike could come in after 3 or 4 or 5 candlesticks, okay? You cannot actually tell how many candlesticks that the market would sell for before the spike comes in. You cannot really tell how many candlesticks that will come. So, but what would you know that we're already expecting the spike to come in, because we have seen a clear signal that the spike will come, okay? So we're waiting. At this point in time, you want to place a buy. The reason I say you should place a buy, because you can risk about 5 candlesticks on the market knowing that the spike would come in. And if the spike comes in and the spike is longer than 5 candlesticks, you have also made a profit, because you will recover from those losses, okay? Let's say the spike that comes into the market, let's say the spike that comes into the market is 15 candlesticks. If you count it with the sell measures, right, and after that 15, the market sold for about 5 candlesticks before the spike comes into the market. That means you have made 10 candlesticks as profit from that trade entry. And if you are using a considerable amount of lot size, that means you have also made a huge profit as well. And make sure that the amount of lot size you use is, you have calculated it well before you put in that amount of lot size, so that you don't end up blowing up your account, okay? You want to make sure that you understand the amount of lot size you are using before you use it to trade at all, okay? So I've observed this market and we're waiting for the spike to come into the market, because we're seeing that the spike should come in because the price has gotten to the level of 10. And if we confirm it right here, you can see that at this point in time there was a spike right here, okay? You can see when it got to the level of 10, the spike came into the market. And right here, even at this point right here, the market did not even get to the level of 10, but it shows us that the edge is sharp, okay? The edge is a bit sharp, and there was a spike as well. Even at this point there was a spike, okay? So we're looking for that sharp spike that's going to come to the market. Take a look. A very long spike came in at the level of 10. At this point there was also a spike, okay? So this is how you tell that this is how you see a possible buy entry on this market. Now, how do you place a sell so that you'll be able to scalp the market, taking advantages of those small price movements on the market? How do you do this successfully? Now, you also observe into this market and you wait after a very long spike that comes in. And not just that you wait after a very long spike, you should also know the condition of the market, where the market is at the moment. If the market is at this point right here, let's say if price is at this point, say the market have bought in up to this point, okay? The market have bought in up to this point, right? For example, then what you do is to place a sell. You place a sell, you scalp 5 candlesticks. If you take a look at this point right here, the market sold for about, let's say about 8 candlesticks at this point here. It might be over 8. Yeah, I think it's over 8, about 9. After it sold, it spiked again. Okay, so if you have stayed in the market for a very long period of time, at this point you will see that this spike that comes in have taken away 1 2 3 4 5, taking away 6 candle ticks. You saw it just recovered. The market will now recover 6 candle ticks from the profit you have made, and all you will get is just 4. Okay, now this is just an instant. The market only take 6. But what if you have exited after 5 candle ticks? You will take that 5 as your profit instead of 4. And if this market continued to buy up to this point, you have all the profit you have made have gone, right? So this is why you should also be careful on this market when you are placing your sell entry. When you are placing a sell entry on this boom 500 index market, you should know that your maximum, like me, my maximum, I normally hold in this market is 5. I normally hold 5 candlesticks from the market, because the market is highly volatile and the market is tricky. Okay, so scalping those 5 candlesticks and wait for another possible sell entry position, so that you'll be able to get another 5 again. So if you spend 15 minutes to get 5 candle successful for each entries, that's a good thing, right? Because you'll be successfully getting 5 candle tick each, and before you know it, you have successfully made some profit on the market without much losses on the trade. Okay, you want to make sure that you manage your capital very well, and you manage your profit as well, so that you don't end up making profit and losing the profit. When most traders, right, when they're trading this type of market, or without using this accurate strategy, like the strategy is accurate, just as you saw that I've showed you. This strategy, if you don't analyze it properly, you will end up making profit and losing the profit, making profit and losing the profit. So this means that the profit that you have made in this market right now, let's say you made profit of $2. Before you know it, they have blown that $2. Another spike will come in and take away the $2. You now enter the market, you just remain in one position over and over again, trying to make back the profit you have made from that market. That's why you need to be using strategy. So it does not matter the way you trade it, okay, as long as you are making profit. That's all that matters. It doesn't matter if you are holding for too long. It doesn't matter if you are using a strategy that is hard to understand but it's working. As long as you are making the profit, that is what matters on this trading. Okay, so you want to make sure that you use a strategy that you are able to understand, just like I've shown you guys. Okay, and you saw that even after we're waiting for here, this is the place whereby I marked right here, the market was still selling. The spike have not come in. So this is what you should put in your mind, that sometimes whereby you expect the spike to come into this market, and being very honest with you guys, there are some instances whereby you are expecting the spike to come quickly, the spike might delay to come. Okay, it's not indicator lag. The indicator is not lagging. It's just the system. It's how it works. It's how the system works. Okay, you cannot always get it all the time, right? But with your own analysis and strategy, you'll be able to make it work for you. All right, now you saw that this market is still buying, is still selling, and the spike have not come in yet. But if you hold on, let's say you have placed a sell at this point and you hold on just a little bit, the spike that might come in might even be longer up to this point. You will be surprised. You will be surprised, because if you exit that market at that very point in time, if you exit the market, just before you exit, you will notice that the spike just come in and you just miss the spike. Okay, you just miss the spike. So what is best to do when you notice that the MACD has gotten to the level of 10? The best thing for you to notice and the best thing for you to do is to wait for the market to still continue to sell for a short period of time before you place a buy to catch the spike. Okay, now take a look at this. At this point, the market have sold up to this point, right? Now, the reason we saw a continuous sell on the 1 minute time frame, remember that previously we saw that this second candlestick, this one right here, was at this point, right? Was at this point, okay? Was at this point. And I told you guys that it will retest, but that does not mean that it won't continue to sell. Now, the reason is because this market now was shortened here. The candlesticks was at this point after it broke out, and the market had bought, right? The next step is for it to sell a little bit before it will buy again. And we'll see that the spike will soon come into the market, because the MACD right here have started creating an upward trend. And if you take a look at this point, whenever there's an upward trend here, the market start to buy. Take a look, right? The MACD started shortening upwards. You can see it started going upwards, and there was a spike here. The same thing that is happening here. Take a look. It started going upwards, and the spike will soon come in. Remember that this boom 500 index on the 1 hour time frame, look at it. Okay, when you got to this point right here, the spike comes in. When it's going upwards, started creating the first upward trend of the MACD, the spike would come. So we're seeing a huge spike on this market that will come into the market soon on the 1 minute time frame, and also on the 1 hour time frame as well. Okay, so I hope you understand what I've said to you guys on how to trade boom 500 index successfully, the episode 4. You know, the reason I'm doing this series is so that you can understand, you know, the different aspects of this boom market, and also the boom and crash market as well, because this market, there are more to it. Okay, there are more to it, and with continuous explanation you will be able to understand properly and things to expect. There are different things to expect. There are different analysis on the market. So whenever you are trading, you cannot just use one thing to say that the market will buy or will sell. Okay, one strategy alone cannot assure you success in this type of trading. So you need to use the combination of technical analysis, combination of how volatile the market is, combination of the indicators all together to, you know, tell where the market is going at the moment. Okay, so I hope you understand what I've said in this video. If you found value, do it to like and subscribe. I'll see you guys on the next video.